In this section, we'll introduce the Chaikin Oscillator, a powerful technical analysis tool for traders and investors. Developed by Mark Chaikin, a pioneer in technical analysis and former stock market analyst, this oscillator has become an essential tool for many traders. The Chaikin Oscillator measures the momentum of the accumulation distribution line, which tracks money flow in a security. This technical indicator helps traders identify changes in buying and selling pressure by comparing short-term and long-term momentum. The oscillator accomplishes this by measuring the difference between faster and slower moving averages of the accumulation distribution line. What makes the Chaikin oscillator particularly valuable is its ability to spot potential reversals in price trends before they actually appear in price charts. In summary, the Chaikin oscillator is a momentum indicator that helps identify shifts in buying and selling pressure, providing early signals for potential trend reversals. The Chaikin oscillator uses a formula that captures momentum shifts in market behavior. The formula subtracts a 10-day exponential moving average of the accumulation distribution line from a 3-day EMA of the same line. This difference between short-term and long-term money flow indicators creates an oscillator that measures momentum changes. Let's break down the calculation process into 4 key steps. Step 1. Calculate the accumulation distribution line, which measures money flow volume into a security. Step 2. Apply a 3-day exponential moving average to the ADL to capture short-term trends. Step 3. Apply a 10-day exponential moving average to the ADL to identify longer-term trends. Step 4. Subtract the 10-day EMA from the 3-day EMA to create the oscillator. Let's visualize how these EMAs interact to form the Chaikin oscillator. The 3-day EMA tracks rapid changes in accumulation and distribution, while the 10-day EMA follows the longer trend. The Chaikin oscillator is the difference between these two EMAs, fluctuating above and below the zero line as momentum shifts. The oscillator has several key characteristics that make it valuable for technical analysis. The oscillator fluctuates above and below zero, with positive values indicating buying pressure and negative values showing selling pressure. Most importantly, it measures momentum shifts in price action, helping traders identify potential trend changes. This formula-based approach gives the Chaikin oscillator its power to reveal hidden momentum in market movements. The accumulation distribution line, or ADL, is the foundation of the Chaikin oscillator. It measures the cumulative flow of money into and out of a security by examining the relationship between price and volume. The ADL specifically looks at where the closing price falls within the day's trading range and combines this with volume information. To understand how ADL works, we first need to calculate the money flow volume. This starts with the money flow multiplier. This multiplier ranges from -1 to +1 and is based on where the closing price sits within the day's trading range. We then multiply this by the trading volume to get the money flow volume. When a security closes near its high for the day with high volume, this suggests accumulation or buying pressure. Conversely, when a security closes near its low for the day with high volume, this indicates distribution or selling pressure. The ADL is calculated by summing the money flow volume over time, creating a cumulative indicator. Rising ADL indicates accumulation of the security, suggesting bullish sentiment, while falling ADL shows distribution or bearish sentiment. Traders use the ADL to confirm price trends and identify potential reversals before they occur in price. To summarize, the accumulation distribution line tracks the cumulative flow of money into and out of a security, helping traders confirm price trends and spot potential divergences. Most importantly, it forms the foundation for the Chaikin oscillator, which we'll explore in other sections. Divergences are powerful signals provided by the Chaikin oscillator that often precede significant price reversals. Bullish divergence occurs when prices make new lows, while the Chaikin oscillator fails to make corresponding new lows. Here we can see the price making a lower low, shown by the downward red arrow. But the Chaikin oscillator makes a higher low, shown by the upward green arrow. This is a bullish divergence. This divergence suggests weakening downward momentum and often precedes a price reversal to the upside. Bearish divergence occurs when prices make new highs, while the Chaikin oscillator fails to reach corresponding new highs. Here we can see the price making a higher high, shown by the upward green arrow. But the Chaikin oscillator makes a lower high, shown by the downward red arrow. This is a bearish divergence. This divergence suggests weakening upward momentum and often precedes a price reversal to the downside. In summary, divergences in the Chaikin oscillator are powerful signals that often precede price reversals. Bullish divergence occurs when price makes lower lows, but the oscillator makes higher lows. Bearish divergence occurs when price makes higher highs, but the oscillator makes lower highs. The strength of the divergence can indicate the probability of a reversal. For best results, always confirm divergence signals with price action or other technical indicators before trading. Traders often use crossovers of the zero line in the Chaikin oscillator as important trading signals. Let's examine how these crossovers work on a price chart and the corresponding Chaikin oscillator. Here we can see the price action of a financial instrument and its corresponding Chaikin oscillator below. When the Chaikin oscillator crosses above the zero line, it generates a buy signal. This indicates increasing buying pressure in the market. Conversely, when the oscillator crosses below the zero line, it generates a sell signal, suggesting increasing selling pressure. As the market continues to evolve, we can see another buy signal forming as the oscillator crosses above zero again. These crossover signals can be particularly effective when combined with other technical indicators to confirm the potential trend change. Here's a moving average overlay that can help confirm the signals. Notice how the price is above the moving average during the buy signal, adding confirmation to our crossover signal. This combination improves the probability of a successful trade. By focusing on zero-line crossovers of the Chaikin oscillator and confirming with other technical indicators, traders can identify potential entry and exit points with greater confidence. Unlike some technical indicators with fixed overbought and oversold levels, the Chaikin oscillator uses relative extremes to signal potential reversals. While indicators like RSI and stochastic have fixed overbought and oversold levels, the Chaikin oscillator relies on relative extremes compared to its historical pattern. Let's examine how the Chaikin oscillator appears on a price chart and how to identify potentially overbought and oversold conditions. When the Chaikin oscillator reaches extremely positive values, it often indicates overbought conditions. Notice that soon after this extreme reading, the price begins to reverse and move lower. Conversely, when the oscillator reaches extremely negative values, it can indicate oversold conditions. Notice how the price tends to recover after this oversold reading. When working with the Chaikin oscillator, it's important to understand that overbought and oversold conditions are relative to each security's historical pattern. Unusually high positive readings can signal overbought conditions, while extremely negative readings often indicate oversold conditions. Always confirm these signals with price action and other indicators before making trading decisions. Unlike fixed-level indicators, the Chaikin oscillator's strength lies in its ability to adapt to each security's unique trading characteristics, making it particularly valuable for identifying potential reversal points. The Chaikin oscillator becomes significantly more powerful when combined with other technical indicators. Using multiple indicators together reduces false signals and increases the reliability of your trading decisions. A common approach is to combine the Chaikin oscillator with moving averages. For example, traders often look for Chaikin buy signals only when price is above its 200-day moving average. Another powerful combination is using the Chaikin oscillator with the MACD indicator. When both indicators generate signals simultaneously, the trading opportunity becomes much stronger. The strength of a trading signal increases with each additional confirmation. A single indicator may give a weak signal, but multiple aligned indicators create a much stronger case for entering a trade. Here are some key rules for combining the Chaikin oscillator with other indicators. First, look for Chaikin signals in the direction of the overall trend. Second, confirm these signals with MACD crossovers. And third, always assess broader market conditions before executing trades. Let's examine how the Chaikin oscillator works in real-world trading scenarios. First, let's look at a bearish divergence example. This occurs in an uptrend when prices continue rising, but the Chaikin oscillator begins to decline. Here we see a stock trending upward, with prices making higher highs and higher lows. However, the Chaikin oscillator is showing a different story. It's declining, indicating weakening buying pressure despite the rising prices. This bearish divergence is a warning sign of a potential reversal. When this pattern appears, traders often prepare for a price decline. Now, let's examine a bullish divergence scenario, which often appears during market corrections. In this case, the price is in a downtrend, making lower lows and lower highs. But the Chaikin oscillator tells a different story. It's forming higher lows, showing increasing buying pressure despite the falling prices. This bullish divergence suggests that selling pressure is diminishing and a reversal might be imminent. Many traders see this as a potential entry point for a long position. Let's summarize how traders can act on these divergent signals from the Chaikin oscillator. For bearish divergences, consider reducing your positions or placing stop losses to protect your gains, as a reversal may be coming. For bullish divergences, look for entry points after seeing confirmation from price action, such as a higher high after the divergence forms. Most importantly, always wait for confirmation from price action before taking major trading decisions based on oscillator signals.